Yes.
Hi, I'm Dr. Dave Janda. Welcome back to the Insider Insight Show. I am honored to have back with me someone who is a very dear friend, someone who is a freedom fighter extraordinaire, and someone who has taken on the syndicate on behalf of your financial freedom and liberty. And the person I'm speaking about is the great Bill Holter. For those of you not familiar with Bill, after a lengthy career in financial services, Bill retired in 2006, moved his family out of the United States because he saw what was coming, and then returned in 2011. He currently makes his home in the great state of Texas. He joined Miles Franklin as an associate writer in 2012, posted commentaries there until 2015. Bill remains a precious metals trader at Miles Franklin, Miles Franklin, Franklin, milesfranklin.com. And he has been working in collaboration with the great Jim St. Clair over a number of years' time. Bill is now doing independent interviews. Bill's going to be starting up his own website potentially down the line. The bottom line, folks, Bill Holter is one of the best, if not the best, forensic economic analysts in the world today. It is my honor to welcome back our friend Bill Holter. Bill, welcome back to the Insider Insight Show on the Operation Freedom platform.
Thanks for having me again, Dave.
Okay, Bill, give us the state of the financial union as you see it here in the United States and around the world.
It's pretty simple, and it's been a buildup of, if you want to call it, 50 plus years of debt. I mean, what they've done is they've levered the system unlike any time previously. And what are they doing now? They're raising rates, and interest rates have shot up. I mean, you've got mortgage rates now over 7%. That goes back to 2002 levels. Basically, when you have an over-levered system and you jack interest rates up with inflation raging, there's going to be an accident. They will break something, and whatever they break will be the first domino in I was going to say a long line, but I'm going to say a complete line of financial assets.
And Bill, when we look at the various financial markets in our country and around the world, one of the things we see is tremendous volatility in what's supposed to be the most stable market of all, that being the bond market. And to me, and tell me if I'm wrong, you're the forensic analyst, but to me, when I see that kind of volatility in the bond market, to me that tells me that we're very close, if not already at, a breaking point. Am I off?
Yeah, no, I agree. We are at a breaking point here. And when you say volatility, yes, it's both ways. You're seeing huge whipsaws in the U.S. Treasury market in a week's time, 2 days' time, even in a single day, that go back 30, 40, 50 years ago. It might take 6 months or a year to complete a move that's done in 2 days at this point. The problem is the U.S. Treasury market is the foundation to the entire Western global financial system. And we've had interest rates, just look at the 10-year. If you go back a year and a half ago, rates were as low as 0.37%. This morning, they're 4.2. What that means is any institution, any entity holding U.S. Treasuries is sitting on huge losses. And that includes the Federal Reserve itself. The Federal Reserve, at this point, if you did a forensic study, you'd find out that they have negative equity. And that's the case for a lot of central banks around the world. The EU, the Bank of Japan, the Bank of England. And I mentioned the Bank of England. They just a couple weeks ago had to pump huge capital into the system to save their pension plans. And why did they have to save the pension plans? Because the assets that the pensions own, primarily being bonds, have been gutted in value, gutted in price. So what is there to pay out the beneficiaries? And it's the same thing, but on a much larger scale with U.S. Treasuries. All these institutions that own U.S. Treasuries are sitting on losses. Looking at the pensions here in the United States, they've typically used a 7 or an 8% hypothetical return in order for that pension plan to perform long term. Well, how many years has it been since the bond market hasn't paid 7 or 8%? It's been 20 years. Mm-hmm. Thus, the entire, if you want to call it the retirement plan of the West, is broke.
What's also broke, as you mentioned, Bill, is our government. We're in over $31 trillion of debt. Right now, Bill, on November 2nd, the cartel group of bankers, also known as the Federal Reserve, not a part of the United States government, raised interest rates 75 basis points or 0.75%. You know, the calculations now show that the service on the debt that we're going to be paying every year is now greater than our entire military expenditures over a year's time. And they're not little.
Yeah, the defense budget until now was the biggest budget of anything on the planet. As a matter of fact, I think the U.S. spends more annually on defense than the rest of the world does. And they spend, I think the number is, call it $875 billion for defense. If you plug in a 4% interest rate, which is now where they've jacked interest rates up to, and there's nothing under 4%. If you plug in 4% on 31 trillion, you're talking 1.2 trillion per year in interest. That's before the doors open the first day of the fiscal year. So you're looking truly, this is mathematically a banana republic. And of course, that's backed up by the fact that there's no longer a rule of law. So we truly are and have become a banana republic that we used to laugh at years and years ago, but now the rest of the world is laughing at the U.S.
So, Bill, when I look at this, I look at a country and an economy that's unsustainable and that is in crash mode. It's almost kind of like when Wile E. Coyote goes over the cliff and hangs in limbo for a short period of time and then falls. I feel like we're over the cliff, hanging in limbo, looking straight down, and the only thing propping us up is vapor. Is that a wrong assessment of where we are right now?
No, that's pretty much right. And I would say, those that want to know are looking down. Most people are just looking out, out and away, because people don't want to know that mathematically the situation is done. I mean, there is no way back at this point. That's a good analogy.
Well, and then we have an administration bragging about the fact that those senior citizens, this is their big campaign pitch. Senior citizens you're getting the biggest increase in Social Security in its history, 8.7%. And then they came to realize, wait a minute, this is tied to the inflation adjustment scale that started in 1972 under Nixon. And in fact, the reason why you're getting an 8.7% increase is because inflation is so out of control.
Right, exactly. And I don't know whether it's they're that stupid or they believe the public is that stupid and can't figure it out. I mean, that's third grade math.
Yet we have the guy who was installed, who I call El Demente, Biden, to be confused with Il Duce from Mussolini back in World War II, the fascist in chief, telling us that the economy's great, never been better. Oh my gosh! Well, we got a poll. Not exactly, by the way, a conservative organization doing this poll. 71% of voters say economy is bad, which is up 49 percentage points since Biden was installed.
Yeah, that's not a shock. I'm guessing what the shock will be, and again, that's if we do have an election. We're only 4 or 5 days out. It's looking like it's going to happen. We've not had any type of false flag, but that's still a possibility. But I think the left has underestimated how angry the population is, and I think they've also underestimated how the population is not and has not accepted the propaganda of, the woke culture, the climate change, the blah blah blah, all this bullshit. The average person is looking at it and saying no way. Mm-hmm. So in my opinion, if we have an election this coming Tuesday, it's going to be an absolute blowout. Now, what will that do? I'm not sure, but I would just hope that you would have Congress open all sorts of investigations into the crime that has already occurred.
One of the things we see are these banksters that are in charge of the Federal Reserve systems around the world, if you will, the central banks around the world. And Bill, one of the things we see is their push for a central bank digital currency. Now, many people hear digital currency and they go, oh, well, this is a good thing. I mean, but wait, they're forgetting the first part of digital currency, the CB, the central bank digital currency. Bill, in my mind, there is no difference between a central bank digital currency and their current paper Ponzi fiat scheme that's backed by nothing, because they control it and they are one keystroke away from zeroing out your net worth. Am I off, Bill?
No, that's exactly right. There is one difference between the current system and a digital currency system. Under a digital currency system, there will not be cash. Whereas right now, of course, you get reported for doing it, but you could go into your bank if you had the balance and pull out $50,000 or $100,000, and they can't shut you down. You could run around spending cash. With a central bank digital currency, if they don't like what you say, if they don't like what you stand for, if they don't like what you do, they'll just shut you off and you're done.
So, Bill, Nigeria, over a year ago, went to the central bank digital currency. That was kind of like their trial run. It did not work out so well for the syndicate because people went around the system and either went in Bitcoin or gold and silver for transactions so that they could not, and they were like, well, only 100% of transactions were supposed to be in this central bank digital currency, and it's less than 20%. Bill, that little model that they tried to institute did not work so well for them.
Well, it didn't work because what you just described is, I guess, a basic tenet of capitalism. People are going to do what's best for them. Mm-hmm. And they made the decision that using their central bank's digital currency was not best for them. So if the number's 20% are using it, 80% are not, that 80% has made the decision, I want to use cryptocurrency, I want to use gold, I want to use silver, I want to be out of the system. And that's something we've talked about for years, was getting out of the system and having as few counterparties between you and your capital as is possible.
Now, Bill, many people in trying to do what's best for them, for themselves, and have looked at the big picture and said, I don't trust any of these cats. I don't trust any of these banksters. I don't trust any of these politicians. These politicians were the one telling me to put a needle in my arm and saying it was safe and effective when it had nothing to do with any of that. Okay? I've had it with all of them. So they said, I'm tired of their paper shenanigans. I'm tired of watching the stock market be manipulated one way or the other. I'm tired of the bond. It's all paper garbage. So what they did is these folks who thought ahead of the game decided, you know what, I'm going to invest in an insurance policy of physical precious metals, gold and silver. Okay? And right? So but and not the paper side of precious metals, but the physical precious metals. Now, some folks, but when they look in the newspaper or when they look online for the prices, they're always looking at prices that are quoted on the fraudulent paper market, right? So, Bill, you are right on the front line of the physical precious metals market. Educate our listeners in where the physical precious metals market is in supply, in demand, and in pricing.
Okay. First off, I want to go back what you mentioned, people moving out of the system into physical gold and silver. The reasoning behind that is people understand that gold and silver have a 5,000-year history. And in that 5,000 years, they never went, quote, bankrupt or defaulted. All of the paper currencies, all of the fiat currencies throughout history have all failed, and the current ones will fail. As far as supply and demand is concerned, I've never seen it even close to where it is now. I mean, you're looking at, what, 1950s paper silver? You've got silver eagles that are almost 100% premium over spot. Mm-hmm. You've got junk silver that's, call it a 60% premium over spot. I did a bunch of 100-ounce bars yesterday just to try to get as many ounces, the cheapest form. And that market has become extremely tight. Huh. We make the purchase and the delivery will not be made for another 3 to 4 weeks. In other words, we own those bars, we own the rights to those bars, but we don't have them yet. And that's across the board. You're seeing with all sorts of products, a week delay, 3 weeks, 4 weeks, 6-week delay. We've never seen these types of delays for this length of time. I mean, this has been going on and getting worse and worse now for several months. As far as the demand is concerned, obviously you wouldn't have the physical pricing if you didn't have the demand. I mean, I'm at the point of at an age of retiring, and I've never been busier in my life. I mean, my phone is ringing, my email's blowing up, and many times on the first contact with someone, I'm hearing, I want to buy gold or I want to buy silver. I want to do it today, and I want to wire my money today. I want my money out of the banking system. And over the years, did I see that type of thought process? Yeah, I did, but it was few and far between. Now I'm getting 2, 3, 5 calls a week similar to that, where they say, and these are people, I'm just meeting for the first time. I want to do this trade and I want to pay for it today. I want my money out of the banking system. And I've never seen that before in the magnitude we're seeing today. And again,
educate our listeners on the premiums. In your track record, Bill, have you seen premiums this high? You mentioned for an eagle, it might be 1950 on the fraudulent paper market, but good luck trying to get them at 39, right?
Yeah, you can get eagles, I'm going to say 37.50, something like that, but it's close to 100% premium. I mean, go back 3 years, 5 years, 10 years. The premiums on eagles were generally between $3 and $3.50. Well, you can't even buy a 100-ounce bar now for less than, call it $4.25, $4.50 over spot. I mean, so you cannot get silver in your hand for less than, say, $24.
Bill, let's say you're running a company that utilizes silver in the product, a tech company, a solar company, whatever, right? Bill, why have we not seen the CEOs of those companies come in and buy silver producers, silver miners? Why haven't we seen that? Because they have to know. They have to know about the supply issues. Why are we not seeing that? Why are we not seeing that? Are they being told not to do that? Are they just, whatever, I'm just going to kind of whistle past the graveyard here? Why are we not seeing that?
Well, you have seen end-use consumers buying directly from mines, directly from producers. But you're absolutely right. There's very little bid under the producers. The producers now, meaning mining companies, have valuations like they did in the year 2000 when silver was $4 and gold was $250. To answer your question, why? I don't know. It's an anomaly, and the miners are extremely cheap. The metals are stupid cheap compared to if you look at gold in relation to the amount of debt outstanding. Gold today is cheaper than it was back in the year 2000 when you had $250, $300 gold. So it's I don't know how to answer your question. I don't have the answer to that, but I would suspect you're going to start seeing some serious bids come into the producer market.
And the other question that comes up, Bill, and I'd like you to address this, is many people say, wait a minute. Why aren't these CEOs of mining companies, other than Keith Neumeyer, because he's been the one who's really spoken about this, but other than Neumeyer, why aren't these CEOs of these mining companies come out and said, wait a minute. Our bottom line, our employees, our company, our shareholders are getting screwed by these banksters that are criminally manipulating the paper price and not allowing it to have the actual price that might be for silver, I don't know, 100, 200, whatever it might be, an ounce. Why do we not see these CEOs blowing the whistle on the fraudulent syndicate?
That's an easy one, Dave. The reason being the mining industry is the most capital-intensive industry on the planet. They require more upfront capital and more capital to run the operation than any other type of industry. So if you had the CEO of company XYZ Mining go ahead and say that we're not going to sell our production and become an advocate, they would be shut off from finance. And that's similar. It's similar to what they're trying to do with ESG with these oil companies.
Right.
Oil companies are capital intensive, and you've got a grand plan to try to shut that industry down, and the way to do it is to starve them of capital. And that's what's happened in mining literally since 2011, 2012. This has been the thinnest period of time as far as available capital to miners in my career. And I've been in the business now 40 plus years.
Bill, there's been much made in some circles of the vaults, in particular the silver vaults on the exchanges, being emptied to the point where there's very little left in the London market, in the COMEX market. Many people say this is an indication that it's all about to fall apart. What's your take on that?
No, that's absolutely correct. You're looking, I think the number on COMEX now that's registered for deliveries under 35 million ounces. And if I'm not mistaken, a year ago, I think there was 170 million ounces. So yeah, the amount that's available for purchase in London, in New York, in the vaults, the amount available has shrunk dramatically over the last 6 to 12 months. And I think all you have to do is look at what happened in the nickel market to tell you exactly what's going to happen in gold and silver. And once gold and silver blow, then the entire, if you want to call it Ponzi scheme, and I say Ponzi scheme because they're able to sell gold, they're able to sell silver, they're able to sell other commodities that don't even exist. So I think what you saw in nickel back in, I think it was March, that's where the entire complex is headed.
And Bill, if we look at major sovereign entities, India, China, Russia, Malaysia, Indonesia, if we compare their holdings of gold and silver today to compare to where they were a year ago or 5 years ago, tell me if I'm wrong, their holdings have significantly increased across the board, correct?
Right. Yes. Yeah, and more than likely a big portion of those purchases were made by offloading dollars.
Yeah.
You don't see that in the DXY index, and understand that the DXY, you're comparing the dollar to the euro, to the yen, to the British pound, a small part to the yuan. So the dollar has been strong, and a lot of people say, well, it's the cleanest shirt in the dirty laundry bin. I don't think that's, I don't believe that that's the case. What I think you're seeing and what you've seen is that so many of these contracts over the last 10, 20, 30, 50 years, so many contracts have been made in dollars. And as those contracts roll off, as they mature, they have to be paid back in dollars. So I believe that that's where your source of demand for dollars is, that the many derivatives contracts, many trade contracts were all done in dollars. And as those mature, it's creating an artificial demand for the dollar. As we get, and that's this assuming that we have a system a month from now or 3 months or 6 months from now, as we go forward time-wise, there's going to be less and less of those contracts coming due, and that's going to create obviously less demand for dollars. And I think I want to add one other thing. A big wild card is Saudi Arabia.
Yeah.
They've already basically said that they are going to join the BRICS. And I would just ask, how could they join the BRICS and continue to say we will only accept dollars for oil? If they're a BRICS nation, wouldn't they have to accept Russian rubles, Chinese yuan? I mean, you name it, just go right on down the list. Indian rupee. So the result of that, once Saudi Arabia does begin accepting foreign currencies, then ask yourself why would nations even have a need to stockpile dollars? Because they'd be able to buy oil, buy trade products in either their local currency or other currencies exclusive of the dollar.
Well, and it's interesting you speak of Saudi Arabia, right? Because now there's chatter that, and tell me the last time a major attack happened where the punch was telegraphed. There's chatter that, Iran is going to attack Saudi Arabia. Now, wait. It makes sense of this for me, Bill, because Iran is an ally of China and Russia. Saudi Arabia recently said, as you noted, is contemplating, and it appears will join the BRICS nations: Brazil, Russia, India, China, South Africa, the commodity producing countries, and use the ruble and the yuan as a reserve currency, and goodbye petrodollar, as you mentioned. Why would Iran, an ally of Russia and China, attack Saudi Arabia when Saudi Arabia is negotiating to be working hand in hand with Russia and China? To me, Bill, This is just more fluff put out there, more disinformation, because if an attack occurs, it might have a drone with Iran on it, but it probably might not be coming from Iran.
Right. If Saudi Arabia was hit and the propaganda comes out that it was Iran, you would have to think that it was a false flag, because Iran, being in the fold with Russia and China, and Russia and China, or the BRICS nations, wanting Saudi Arabia as part of the team, it wouldn't make any sense. Now, it would make sense from the standpoint of, what does the U.S. consistently do? We've stirred up, call it war. We've stirred up war all over the world.
Well, hey, let's look at the Nord Stream 2, right? Now there's there's documentation that trusts that now she's now departed as the prime minister. They needed her to take her place and then move out so they could bring this Goldman Sachs alumnus in that wants, central bank digital currencies and the whole list. But there's 1 minute after Nord Stream blows, she texts Blinken, the Secretary of State of the United States, it's done. Whoa, right? But meanwhile, the United States was out there saying, oh, Putin blew up his own lines. Okay. He's many things, but he's not stupid. And he's not about to blow his own leverage point up, right? So here we go, Bill.
Yeah, Dave.
And you mentioned earlier the false flag. The false flag kicking this off. Bill, this could well be the false flag to cover for the takedown of the financial system. So everybody's pointing the finger at that drone attack and this and Russia and Iran and blah, 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 when it's really the banksters that have set this whole thing in motion.
Yeah, Dave, I've said that for years. I've said that because the math does not work out, the end game would have to be some type of false flag to kick the table over, so that they could point at it and say, our policies were sound, our policies were working, except for whatever the false flag event. Also, it's interesting to note that Russia was just denied, I think it was in the UN, they wanted to bring forth evidence of these biolabs in Ukraine. And who shut them down? The United States, Britain, and France.
Yeah, transparency is what the syndicate, the globalist cult, despises. Because transparency leads to accountability. And that's the last thing any of them want, Bill.
Yeah, they cannot have that.
So, in Bill Holter's endgame, we're close. Would you say I'm accurate in that assessment?
Yeah, we're close. There's no way to tell when. I've been on the record now for, 7 or 8 weeks, thinking that there would be some sort of false flag prior to the election, which would either delay or cancel the election, because, in my opinion, there's no way that the left can cheat enough to retain power, and they've got to retain power. From a math standpoint, the Federal Reserve has raised rates and central banks have raised rates unlike any time ever before, especially coming off the levels of basically zero. Did we have a point in time where rates went from 7% to 9 or 10? Yeah, that's called 1987. And that was only not even 3 points increase off of a 7 base. Now you've got over 4 points increase off of a 0 base. Mm-hmm. They are purposely pulling the plug, pulling the rug out, whatever you want to call it. They are purposely imploding the over-levered financial system. And think about it. What's their slogan or motto been? Build back better.
Yeah.
Well, how do you build back? the only way you can build back is if you've already torn it down, and that's what they're doing purposely, is tearing the financial system down. And but what most people don't understand is the system that they're tearing down is the credit system. And I've been adamant for years that without credit, the world does not turn. Your daily life will not be anything even close to what it was.
And people will say, Bill, okay, but they're going to suffer too. Oh, no. Because, Bill, they've pre-positioned themselves so that out of every chaotic event, they get more power, control, and wealth. Correct?
Right. Yeah, absolutely. Anything bad that happens, they've already, like you said, they've already front run it, and they win.
And Bill, if we look at the store of precious metals that the banks hold, if we go back to 2011, how much gold and silver did J.P. Morgan have in their vaults?
Net maybe less than, maybe they were net short because they had to take over Bear Stearns, and Bear Stearns had a huge short position. I mean, they didn't have, from a physical standpoint, I don't think they had anything. Now you've got Ted Butler saying they've got 800 million ounces or a billion ounces. So yeah, I mean, they've, over time, they have gotten long. And if you look at the COT, the Commitment of Traders report, for the very first time that I can remember, the commercials are actually no longer net short. They're slightly net long.
So, Bill, it's the end game. It's the end game right now.
And they're always right.
Right. They never lose.
It is. I mean, right. And as I mentioned, they are net long. We're talking about silver. They're net long in silver. And just go back and look over the years how many waterfall events there were with paper contracts that had no silver backing whatsoever that were dumped on the market. And that's the way the commercials controlled the market. Now they're long. And when all is said and done, the banks will be the ones who make the most money in the shortest amount of time.
So, Bill, final question. We're in the end game. We're in the end game. What do people do? Is it too late? Is it too late for them to do anything?
It's not too late to do anything. I mean, you could watch this video, and if you've done nothing at all, go to the grocery store, make 3 or 4 trips in there and spend $1,000, and you probably have enough food to last you, I don't know, 4 months, 6 months, whatever. But all along, we've said, try to become as self-sufficient as you possibly can. And that's, when I say self-sufficient, I'm talking about in your daily life with food, with water, with energy, with your finances. Get your capital out of the system. If you have stocks, order the certificates out. If you have bank accounts, you probably don't want to have a bank account. You probably want to have a savings account in silver that's buried in your backyard or what have you. The whole idea is to be as self-sufficient as you possibly can. And I mean, I can tell you from experience, it's not something that you can just pick up over a weekend and get done. I mean, it's a long-term process. And I've even suggested that people spend a weekend, turn your electricity off, turn your water off, and just go through life where you have a tank of gas, but there's no gas station open, so you're going to have to ration where you drive to. And that includes not going to the store because you can pretty much bet the stores are going to be empty. So, go for a weekend and practice, see where the holes are in your plan.
Bill, what's the best?
Like I said,
Bill, what's the best?
I was just going to say, if you
go ahead.
If you haven't prepared at all, just think of the absolute basics: food and water.
Food and water. A means of protecting yourself. And if you can go out and
Right.
find some gold and silver, go for it.
You have a tank of gas, but there's no gas station open, so you're going to have to ration where you drive to. And that includes not going to the store because you can pretty much bet the stores are going to be empty. So, go for a weekend and practice, see where the holes are in your plan.
Bill, what's
And
the best?
like I said,
Bill, what's the
I was
best?
just going to say, if you
Go ahead.
haven't prepared at all, just think of the absolute basics: food and water.
Food and water. A means of protecting yourself. And if you can go out and
Right.
find some gold and silver, go for it.
You have a tank of gas, but there's no gas station open, so you're going to have to ration where you drive to. And that includes not going to the store because you can pretty much bet the stores are going to be empty. So, go for a weekend and practice, see where the holes are in your plan.
Bill, what's
And
the best?
like I said,
Bill, what's the
I was
best?
just going to say, if you
Go ahead.
haven't prepared at all, just think of the absolute basics: food and water.
Food and water. A means of protecting yourself. And if you can go out and
Right.
find some gold and silver, go